Hello, agents. Hello, everyone. So, today we're going to talk about pricing for immediate annuities in November. They've gone insane, really great, like exploded in the good way. But we have one issue that just arose. The 10-year note dropped. It was 5%, just about 492, 499 a couple days ago. Now it's 451. So that's a huge decrease. And these insurance companies raised rates with those treasuries closer to the 470 where they were hovering. Then they jumped to 490. We had some more increases, but now they're down to 4.5. So the numbers I'm showing today could easily decrease in the next week or two. So just be aware, right now is one of the better times with fixed annuities. Historically, rates are really good in a nice high middle range of their historic levels ever. So we're doing pretty good. So anyway, let's jump right into the pricing for immediate annuities for November 2023. Let's jump into this. So here's all the pricing. This is based on $500,000 of non-qualified premium, right? Non-qualified is money that has been taxed already. So it's not like IRA or pension, stuff from the checking account that you're putting into the money. So this is what we're using, non-qualified money. And these are non-premium tax states. Some states charge an extra tax, so your payment may be lower. Those states are noted at the bottom of the form here. So anyway, you can go through 500,000. These are monthly incomes for male 60, 65, 70, 75. Here's the females. And then, these are life only, means that as soon as the person dies, it ends. Life in 5 is whatever's longer, life or 5 years. And same with life in 20, whatever's longer. So if they live 30 years, it'll pay. If they died in the 10th year, it'll pay for another 10 years to the beneficiaries. So that's a life in 20. Let's take a look at this life in 20. It has the highest guarantee. So if you look at the life in 20 on a male age 75, that's going to give this male on a $500,000 premium. Of course, we're using an A+, super strong A+ company here, $34.58.23 a month, right? So what does that mean? So that's he's going to get that $34.58.23 for no less than 240 months, but it could be longer if they live longer. So the minimum return on that 500,000 after it's paid out, it's 20 years, but in 20 years will have received $829,000, right? So basically what that is saying is, where else can a male age 75 go? Take 8.22% of his initial premium. That's what, that is 3,400 times 12 is 8.22. It's $41,000. That number's a little off. It should be higher. With these guarantees. So where else can you take $34.58 a month? Know you're going to get $829,000 back, and know it will never outlive your money. So that's the idea of the period certain. But if you don't want to go so long, and if you have qualified money, you can't really exceed the 10-year period. But let's just take a look at that 10-year. It's paying the 75-year-old $41,3619. If you times that by 12, that's $49,634, right? What's the equivalent of that? That's a 9.93 of the 500,000 initial premium. Where else can a 75-year-old go take 9.93 of their money and never run out, right? So that's the idea of the immediate annuity. So when you're comparing these to, say, an FIA with an income rider, and they say this is your payout percentage, well, our payout percentage is 9.93. 9.93 with the guarantee of 10 years of that income. Never, you get at least 10 years. So, and then on the 20, it's a little lower. And if you jump up to the life only, you're talking nearly almost 11. So that's how those work if you want to compare them to other prices out there on lifetime income products. So anyway, yeah, you can pause the screen there and take a look at all those payments. This is the joint and survivor. So this is two lives. This is a male and female. So it'll pay 100% of this payment for as long as either one is alive, but no less than that guarantee of 10 or 20 years. So I use like 5-year difference. All these need to be quoted because each year is going to matter on pricing. But a male 65, female age 60, you'll get about 2889, 2860 with joint life in 20. So as long as either one is alive, but no less than 20 years. And there's the 70, 65-year-old and 75, 70. I just did that to give you a kind of a ballpark where those work. Now we're going to go ahead and jump at the period certain only. So these are no longer life-based. I'm still using the same company, same premium, same all that good stuff, non-premium tax states. But this is non-life contingent. So let's just say you want a guaranteed payment for a certain period of time, no matter if you live, die, whatever, and it's only based on the time and no life contingent, no life expectation there. So the 20-year there is going to kick off 34.56, and that's guaranteed to return $829,000. That's the maximum, the minimum, that's what it's going to do. So, and if this is 100% non-qualified money, which is what we're quoting, 60.3% of that payment is going to be excluded from tax. So you get the money back, you get a tax benefit because why? Principal and interest. Some of it is your own money coming back to you. You don't have to pay taxes on that. So only 40% of it's like actual interest coming back to you. That's the way they look at that. So anyway, that's your exclusion ratio. That's the 20-year period, certain only, no life. And that goes for all ages. So a 20-year-old or a 70-year-old gets the same payout on a 20-year period, certain. FYI. So be sure to shop That SPIA. I'm using the A+ company. There is an A- that beats these in some areas, and there's an A++ that beats this in the joint areas. So it just depends. You got to shop That SPIA. Look at multiple companies. There's about 5 companies in the top range, about 3 at the very top right now that I'm running. But of the 18 I ran, you get some really big spreads in there. When I'm looking at the exclusion ratio on some of these was between 40 and 60. So that's the difference. The lower the exclusion, the better the deal. So anyway, because that's more interest coming back, right? So yeah, this is me showing you work. So this is the single life with male 75, single life in 20, and then you see the payment 34.58. That payout was 8.3%, and that's principal and interest. Remember, once you buy one of these, that 500,000 is gone. It's no longer worth 500,000, right? You can't access that. It just becomes this monthly income. So that's what it is. So you're not earning 8.3%. That's what you're getting out of all your money. 8.3% you're taking of your own money back, but you'll never run out should you exceed 100% of your money, right? So that's all it is. It's not an interest rate. Okay, good. Sometimes people misunderstand that. This is the period certain only, just to show you the work. You need a SPIA quote, go to my website, spiaquote.com. Just go ahead and go to the top and click on get a quote, fill out all the information, and it should populate. Here, I think I have actually a little video showing you how to do it. Go ahead and click on get a quote. Go ahead and fill in as much information as you can. It's very important. I have this information, your state, the premium, the option you want, an email address. Leave a note too, because I get so many of these, no one even replies back. So I'm very picky. And if the deposit date's like a year out, I'm probably not going to quote it. I'll hold it till later. So, I'm really looking for people looking to do this in the next few months. So if you're going to put one of these in for the first payment date or the deposit date, make sure it's, reasonably within the next 60 days or so. Anyway, here's some disclosures. If you want, pause the screen there. So that's the end of my presentation. I hope you all like this month's November pricing for immediate annuities. And again, I'm going to reiterate, that 10-year treasury was at 5. It is at 450. Rates are subject to change at any time. MIGAs, SPIAs, FIAs, they're all on the table for rate cuts as of right now. My prediction going forward in the next couple weeks, if these rates, these benchmark treasuries, bonds, they don't increase back up. So I don't know if it has to do with the government buying into these 10 years. I remember reading an article that the 10-year was out of control. They were going to buy it down. So maybe that's just part of this. They're putting a bunch of money in and it'll come back. But keep an eye on that. Anyway, for the most up-to-date information, follow me on LinkedIn because I do post there pretty much every day. And YouTube, you guys know if you're watching me here. So like, follow, subscribe. Talk to you later. Hope you're all good. Call me 800-373-9697. Take care. Hope you all have a great weekend because today's Friday. Bye-bye.